Okay, so I'm waiting for everyone to join. I just sent out the link now. Okay. So yeah, I'm waiting for everyone to join. So I'll just kickstart. Because today is more on the basics actually. Today is more on the starting point, yeah. The basics of Forex. This the link is just for those that join. It's not like a public link, you understand? It's only a private. You can see the amount of people joined now. I'm seeing 11, yeah. You get, so it's not for everybody. So don't go sharing the link and all that. It's a private link. It's not live for everybody on YouTube. You could see the amounts. Had it been it was live by now, you should be seeing 100 plus or 200 thereabout. But yeah, it's just a private link. You get. So it's only accessible to those with the link. Yeah, I just made it a private section. All right. So I prefer using YouTube because of the flexibility, whereby after the class you can just get access to it immediately. So that also while I'm still, because we are working on our web page here, while we are having our sections, we can just upload it directly to the web page and everything. Hope everyone can hear me loud and clear. So if you can hear me loud and clear, just type yes in the chat box. Type yes in the chat box. Welcome, 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 welcome. Welcome to our first section. Yeah, the $1,000,000 classroom. So today is the beginners class. Yeah, so if you can hear me loud and clear, and the audio is very perfect because I need the audio to be perfect too. So if you can hear me loud and clear and the audio is perfect, just type yes in the chat box. So I know that we are on point. On my phones. Okay, so everyone can hear me loud and clear. Welcome, 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 welcome. So today is the beginners class. So those that are a bit advanced, today might not be sweet for you because today is just mainly for beginners, right? So I want to start because I believe there are some people that are total beginners in today's in the class today. You understand? Those that don't even know anything about forex at all. You get, so today is going to be beginners friendly, starting from the basics like what is forex. You understand? Down like we'll finish the basics today, so that Wednesday when we'll be having our physical class, then we can start talking on not advanced totally, but at least we can start talking on the actual stuff we need as a trader. You understand? From there we get to strategies and everything, because the main aim is for everyone to be so good by the end of this month. You understand? So yeah, I think that's just it. So let's get started. Let's get started. So I'm going to be writing down what we'll be focusing on in today's class. I'll try as much as possible to go straight to the point and not make it too long, right? So let's start with this, what we'll focus on today. I think let me increase the text. Okay. So the first point here is what is forex. I would have even typed it out before the even class started itself. What is forex? So everything that I'm going to be typing out here is what we'll treat in today's class. So if you already know it, you can either want to stay or you might just leave maybe, because I believe some advanced traders will be like, what's going on here? So this is like the beginner section, right? For those that are new to forex as a whole, right? So we'll talk on what's forex, what's traded in the forex market. um okay, the next we should talk on is the base and quote currency. So you see it's just beginners friendly. And these things are things you really need to know as a forex trader too. You get the next would be the market participant, um, or broker, so you can have a clear idea of forex is. So they just give me a sec. Let me type everything out. So forex terminologies. Who's that? Who's that? Sorry. I think I need to put my phone on DND because calls will start coming in very soon. So this forex terminologies is broad, you understand. So there are different stuffs inside. I don't know if I should list them out, but that one is a set on its own. You get, I think. What else? What else? What else? What else? What else? Hmm. Maybe as we get to that point, then I'll try to explain everything. Okay. Okay. Hope everyone is following. Yeah. Okay, so now the first point here is was forex. So it's pretty simple. The word here, the word forex here stands for foreign exchange, right? The foreign exchange market. That's what this forex means here. So it's the exchange of two different currencies. If you notice, why is my voice like this now? So if you notice in the forex market, two different pairs are being traded. You understand? We don't just bring only GBP and just exceeding it with GBP. You understand? So it's an exchange of two different currencies. So it's just like I think we need to even start with normal pairs for now before we switch to gold. So you understand very well. So now, for instance, this is GBP, you understand, British pound and USD. So it's two different currencies. It's just like the normal marketplace. You all know the buying and selling of two different pairs. You understand? It's just like exchanging me bringing pound dollar to exchange with, you understand, the US dollar. You get like the way we go to market using our money to buy normal stuff. So that's just what it means. You understand? So when we say forex market, but now it's not like the normal actual marketplace you get. So it's more advanced. Let me copy this. Okay. Yeah. So that's just the simplest thing you understand. I'm trying to go straight to the point. So that's what forex stands for foreign exchange. You understand, exchanging of foreign currencies. You understand, exchanging of two different currencies. So now, what is traded in the forex market? So it's pretty simple. The things that are being traded in the forex market is currency, like the one you are seeing on the screen now. You understand, this GBP USD. It's currency. You understand. Secondly, we have stocks. You understand, we trade stocks. You get commodities, synthetic indices. What else? Indices too. You get, so those are what are being traded in the forex market. So now, going straight to, I'm just going straight to the point. You understand, no trying to bring too much theory, because this is just what you need to know, right? So now, the base and quote currency. What are the base and quote currencies? So it's just like this GBP USD here, right? So GBP here in front, and USD. USD is United States dollars. GBP is the Great British Pound. You understand, Britain Pound. So this GBP here is the base currency, right? And USD here is the quote. Now the base, meaning that, okay, if, let's say for instance, this is already GBP pair. I said, okay, I want to long, I want to buy GBP USD of this point, particular point. It means that I'm saying the base currency, which is GBP, is going to be stronger than USD, and USD is going to be weaker. That's what it means. So if I'm saying I'm shorting GBP USD, it means that I'm saying USD dollar is going to be stronger, and GBP, which is the base currency, is going to be weaker. You understand? So that's just the the meaning of this base and quote currency. Now over to the market participants, right? So we have different participants in the forex market. We have the normal commercial banks, the big commercial banks. You understand? We have the central banks. Central banks are not there to make profit, because we have the non-profit and those that are actually in for profit. You understand? The central banks are there to make sure, because they are with even governments are part of the forex market. You understand? With the central bank, so they are more like the non-profit part of it. You understand? So they are there just to pump in money to make sure that their country currency is stable. You understand? They are not there to start buying and selling to make crazy profit, or that theirs is just to make sure that their country currency is stable. You understand? You get, so we have the commercial banks, like I said, the big commercial banks. We have the central banks. We have the brokers. We have the governments. We have the hedge funds. We have the normal retail traders. You understand? Even we, the participants too. You understand? We are also part of the forex market, because we are also participating. We get, normally we shouldn't even be able to participate because of our normal money, because our money is too small. As time goes on, I will try to explain why. You get, so now what is this thing, the forex broker? So the forex broker is more like a financial institution or a financial company that helps us access the forex market. Like I said, our normal money, our normal $100, normal $1,000 might not be enough to um, be a part of the forex market, but these particular people are more like the middlemen. You understand, middleman. You understand. So they are in the center, giving us enough leverage to participate in the forex market. You get, so now moving to the criteria to selecting a good what's it called, broker. There are different things you need to look out for. One, it's the regulation and security of that particular broker. You get, I know it's more like a sounding theory, because that's just the basis of forex. It's going to be somehow boring at the first place. You get, so it might not be sweet to hear. You get, so now the first thing you need to look out for is the regulation of that broker. How many bodies is it regulated in, based on that particular broker? You need to do research. Okay, is this particular broker really regulated? And the security, is it top notch? Because if it's not a regulated broker, they can just vanish anytime. They can just disappear with your money anytime without you being able to track them. You get, so it must be regulated. You understand? And also in terms of security, because it's hand in hand. If it's not regulated, then it's high risk. You get, so that's just that's just one. And also the transaction cost. We are still talking about the criteria to selecting a good broker. So the transaction cost is more like the spread of that particular broker. You get, so what's the spread? Is their spread too much? and also the commission, because most people might not charge based on spread. They might charge based on commission. Maybe your one lot size, they might say, okay, inside of one lot size, I want to charge you $10. I want to charge you $1. You understand? So you need to look out for those stuff, their transaction costs, to see if it will benefit you. You get. So the next thing you need to look out for is the deposit and the withdrawal of that particular broker. So is the process too much? Because most of the time the process might be too hectic based on the country you are. So you need to make sure, okay, this particular sorry, not problem, this particular broker, what's their deposit process? You understand? Do they have different payment methods? You understand that I can just maybe transact from my bank directly, or maybe using cryptocurrencies or any other ways like PayPal, Stripes, and all that you get. And also the withdrawal process. Is it also convenient for me in this particular country? You understand? So that's one thing you should also look out for. And also their trading platform. Are they on MT4? Are they on MT5? You understand? Are they on C traders? Your all those particular stuff. So you need to look out for that brokers. Make sure that they have this particular trading platform, because that's mainly the most common trading platform that we have out there. You get. So, and the next thing, which is the last, you need to look out for is their customer care service. You understand? So how fast do they reply to your queries? You understand? How are they even relating with you? You get. So those things you need to look out for too. So now moving to the market hours, we have four different market hours. So we have the, I don't know if I should write it out. Okay, let me just write it out. So we have the London session. We have the New York session. So I'm trying to throw more light on what you would maybe later need as time goes on, things you need to know as time goes on, so that in case we are talking about it, you won't seem lost or anything like that. You get. So we have the seed section, and lastly we have the Tokyo session. So each of these particular section lasts for 10 hours. You understand? So each of them are for 10 hours. So the London section is one of the most common section, right? Being traded. Let me drag it up a bit. So personally, I trade the London and New York session. Those are the two sections I personally trade. So the London section starts from 8 a.m. Nigerian time, to be precise, for those that are not in Nigeria. You understand? So 8 a.m. down to, I think, 5 p.m. So each of them is 10 hours. So 8, 9, 10, 11, 12, 1, 2, 3, 4, 5. So yes, each of them lasts for 10 hours. So London section 8 a.m. down to 5 p.m. So the New York session starts from, this is mainly the session that we have news fundamentals. You understand? Fundamentals truly always drops during the New York session. So this one starts from 1 p.m. down to 10 p.m. Each of them 10 hours. Hope everyone is following. So the next section here we have is the Sydney section. This one starts from, I think, 10 p.m. if I'm not mistaken. 10 p.m. down to 7. I guess, let's see, 10 p.m. down to 7 a.m. And this counts 10, 10, 11, 12, 1, 2, 3, 4, 5, 6, 7. Yes, 10 hours. And the Tokyo section starts from is it 12 a.m.? Yeah, 12 a.m. to 9 a.m. Yes. So each of them are um 10 hours. They last for only 10 hours. So now, one thing why these things are necessary is because all these pairs, you understand, they have period that they are very volatile in. You understand, they have sections that you can trade them and they will move properly. It's just like you trading the British pound during the what's it called, Sydney section. It tends to start consolidating or move very slowly. You understand? So the kind of pairs that you trade during this kind of periods are like JPY pairs. You understand those kind of Japanese yen pairs you get. So those ones are open during those period. You could see their sections, Tokyo section. So those are their own section that they are very very volatile. So this also you need to know this in terms of choosing the particular pair that you would want to trade and the kind of section it's most perfectly in. You understand? But for like GBP USD, USD JPY because USD is still there. USD card, the gold, you can trade them during the London and the New York session because those sections are sections when their own bank are active, they are open, so it becomes more volatile. So why I said that more commonly why during the New York section there is always fundamental is because the London section and the New York section are overlapping at that particular period. You could see London section ends at 5 p.m. So around 1 p.m. it is still open. So and that's when the New York session is opening. So two of them, two sections are overlapping and the market becomes more volatile when two sections are overlapping. You get so that's it too. So that's why you see that there is always more volume in the market around 8 to 9 a.m. in the morning when London sections wants to open. Why? Because Tokyo section is also on at that particular period. So two sections are overlapping, so it becomes more volatile. That's why you see the opening of London section. Most of the time, the market becomes a bit volatile. You understand? Those slow movement stops and it becomes a bit volatile again. So I think that's for the first. I even like the way we are even doing it very fast and straight to the point. So you get so no much theory. Yeah, you get. So the next topic here is the forex terminologies. You understand? So there are different terms we use in forex. So you just like you seen a Nigerian guy from the way the person talks, you understand, speaks, you say, okay, yes, this is a Nigerian. You see a British, how will I even call it? Is it a US guy or something like that? So the way the person talks, you know, okay, this person is from the United States. You get the same thing in forex. If you see someone that is into forex, the way the person talks, you will be able to know, okay, this is a forex trader. So now, one of the common terms we use in forex is long and short. So I'm going straight to the point, and so that we'll just be able to cover everything because it's much. This theory part of forex is too much. You get so we see something like you see something like long and short. So long means if I said I want to long this particular pair, which is GBP USD, it means I want to buy. You understand? You see it here. You see that particular stock showing on this top of that screen, long position. You understand? This is short position. So if I said I want to long gold, I want to long GBPUSD, it means I want to buy gold. If I say I want to short, same thing, it means I want to sell. You understand? It's just the same buying and selling you get. Just we are using different terms for it. You get so the next stuff there is bullish and bearish. Still the same thing. Bullish and bearish. Or let me even say bull and bear first before I even go to bull and bear. You hear something like bull and bear, and you even see most graphic image of most people using bulls and bears as an example and all that you get. So now it's this bull. Now we know bull. Let me even show you an image. You know bull already. So this is a bull, right? So now the concept behind this is how the bull attack. You understand? If it wants to attack someone now, it uses its horn. You understand to lift the person up. You know how it will hold the person and throw the person up. So a bull here stands for long. Also, it stands for buy up movements. You understand? So that's what they use to represent bull and up market. You understand? Buy also. You get so the bear too is the concept behind how it also attacks. You get so if the bear wants to attack, it pins the person down. You understand? It rises up and pins the person down. You get so that's for sell. You understand? Drop pins the person down. So that's for the bear. You get so also we have the bullish and the bearish market. So if I'm saying if this market is bullish, it means it's an uptrend. The market is the market is in an uptrend. And if I say the market is bearish, it means that this market is in a downtrend. You understand? So that's just what it means. You get so that's one common terminology you will be hearing in forex also. So we also have the bid, and now it's becoming technical. So this is where you need to start paying close attention, because this is where the most common stuff you would be hearing in forex, you would need in forex, things you need to know in forex. This is where it starts coming in. You understand? So we have the bid and ask price, right? So we have the bid and ask price. So let me show you what this thing means here. I think mine is not on. Let me see if I can on it. Just give me a sec. Let me set it real quick. I think I offed mine on this particular remembered. Okay. Yeah, it's hidden. Let me show in lines. Or should I show it in value? Okay, yeah. So this is it here. The bid and ask price. You see ask, you see bid here. So now one of the common terminology also is this bid and ask price. So now you could see up here. I don't know why this thing is covering it. Let me zoom it very well. Let me try to zoom it so you see it very well, because this is where the main stuff starts coming in. So now you see above here, you see the ask price, and below here, you see the bid price. So if I want to buy GPP USD now, the market will place me at the ask price. Hope you're getting. That's where you see you enter for a buy here, and you see where the market is now. If you see this red line up here is the ask price, and this bid line is the sorry, this blue line is the bid price. So if I buy gold, sorry, if I buy GBP USD now, this is where the market will put me in at this ask price. It will carry your order up a bit to this particular point, few pips, you see, just maybe one pips or something up to this particular point. That's where it will put you in. And now if I want to sell, it will now drag it up a bit. You see, um, because the market is now volatile somehow. You get, so now if I want to sell, it will place me at this the current bid price. You get, that's where it will just drag my order to at the current bid price. That's why I see most of the time the market pushes inside, the bid price will still be below. So if you place a sell, it drags your order down a bit. You see now where the market is. If it's the market is just volatile, it's not stable. I would have showed you, because it's mostly it used to be at the center. The current market used to be at the center. So if you place a sell, it drags its order down a bit. You understand? If you place a buy now, it pushes up, and you'll be like, ah. That's why you see whenever you just place a trade, you are always in red first, right? So that's just the bid and the what's it called? The ask price. So now from there, the next thing you need to know here is still related to this is now spread, right? So now spread is the difference. You used to use something like spread when you remember when I was telling you about choosing your broker, when I talked about the transaction cost and everything. I talked about spread, right? So now this is the meaning of spread here. So the spread is like the difference between the bid and ask price. So once ever you place a buy here, it drags your order to this particular point, this ask price. So it shows you the difference between the bid and the price is just spread. So the broker, that's why I said you need to make sure you check the transaction cost of that particular broker to see if their spread is too high. Because if it's too high, it means that this maybe you place a buy, it might even push it up above, like up to this particular point. You get, so that's one thing you should look out for. You get, so the spread is just the difference between the bid and ask price. That's where the company itself, the broker itself, makes money. You understand? That's where they make their own money, because they are actually the one giving you leverage to participate in the forex market. So how do they make money? It's either from commission, because if you don't need them to charge you based on spread, you just need tight spread or instant execution and all that you get. So they now charge you commission based on the lot size you are using. You understand? So that's also in part of spread, right? So the next thing here we need to know is the I'm just following it accordingly. I just listed it. So the next thing you need to know is the pips and the pipettes, right? So this is other part you need to know. Let me zoom in this first. I think I can zoom here, so let me just write it down instead. So pip and pipette. Where is the write up? Where is the write up? Where is the write up? Okay. Hope everyone is following. I know this. That's one thing with all these basics class. It used to be very boring and all that. So you get to just bear with me. So we have the pips and pipette. You get. So that's the next thing. Let me even write. Let's use one. Maybe this one here as an example. 1.2700. 1.27002. Or let me just use a random number. Sites. Everyone will you understand it very well. 0013. Let's put it like that. 0013. So you are using the GBP as an example. So I will show you for other pairs and everything. So now, what's the meaning of pips and or this meaning of pips now? The same way human movement is being calculated by normal hour steps. You understand? Maybe as you are moving from here to here, most of the time they calculate it based off on your steps. You understand? So that's how the forex movement through the movement in the market is being calculated by pips. You understand? That's the difference. We human we calculate our movement by steps. You understand? The forex market, its movement is being calculated by pips. So if market moves from one particular level to another level, you understand? So we calculate it based off by pips. So now this particular what's it called? This particular right up here, this particular one here, I'm using it as an example, maybe the current market position. Let's say this is the current market position, right? So this particular, the fourth number after the decimal, after this particular dot here, you get is the pip here. This fourth number here. This is where the pip starts counting for currency pairs, currency pairs, currency pairs. You get, so this is where the pip starts counting. So from here, you see that it's one. You get, so this like one pip, you understand? So now this particular one here is the pipette. It's just like how like I'm just trying to look for different examples to explain this. Let's say our normal wall clock, right? So we have the hours, we have the ones that count in hours, the one for minutes, and the ones that count in seconds. So let's see, I'll use pipette as the seconds, you understand? So because it takes like 10 pips to be 10 pipettes to make one pip, you understand? So I'll use it, I'll say seconds is the perfect example for pipette. So it's not really needed. We are the main focus is these pips. You understand? So from 0, 1, 2, 3 to 9, you understand? Once it's 9, you get this particular point, this one will turn to 0, and that one will enter this particular point. So it turns to what? If it moves from this, let me write something else. It moves from this particular number to 1.2010.3. Yes, come in. Sorry, just give me a sec. My cleaner is around, so let me just attend to her. I'll be back now. Yeah, sorry about that. I need to. She was about leaving. That's why. So let's go back. So now let's say this particular price movement moved from this particular one, maybe count 1, 2, 3, 4. This particular PPA, because this one is from where the pip starts counting. You understand? From this particular one, it moves to 9, then it turns automatically. It turns to what is 0, and here it becomes 1. This is it now. So from here, you know that this is 10 pip. You understand? From that's 10 pips. You understand why? Sorry, I don't know why I put dots here. There's no dots here. So this particular tree is still the normal pipette. So we don't pay attention to that particular one. Let me see if I can do an example. So there's how you can also calculate it, right? Let's look for other examples. Okay. Um, let me use a buy or sell position. Although these particular positions used to make everything easy, you get. So let's say at this is where my stop loss is at, you get, and this is where my target is. So now what I do is I pick out this entry price. You understand, where is it at? So let's see what position. That's 1.2581. You understand? So what you do most of the time, you that particular price minus the stop loss price will tell you how many pips the stop loss is. And there's another pretty way you can just use the ruler to, you understand, just drag it from that entry point to the stop loss point, and it tells you how many pips it is. I think it's 30 pips if I'm not mistaken. Yeah, 30. It's been long I traded GBPUSD actually, so don't mind me. You get, this should be 30 pips. You get, so this is one of the reasons why I don't trade GBPUSD. Imagine 1 hour and I'm calculating pips in 1 hour, this kind of long gap, and it's showing me that it's 30 pips. That's why I love gold. It's very volatile and straight to the point. So hope everyone is following. So that's for pips. But now, one thing you need to know is that not all, you can't calculate all like that. You understand, the same way I just calculated this. For let me show you that pair now. Let's say for instance USD JPY. You see now theirs is different. You see? Sorry. So this is for what's it called? Japanese yen. So this is how theirs is being calculated. So this particular 1.5.000. So theirs starts from this second number after this dot. You understand? The second number after this dot. Let me still show you an example. They say 154.013. Then it moves to 4.103. So it's still the same thing you get. So this is where the pips, well, I didn't save it. I didn't press OK and it just vanished. So 154.013, 154.103. Why is it not saving? Okay. So now this is where its own pips is calculated from, this particular point here. So the second number after this dot here, you understand? So this one too is their own pipette, you get. So as this thing move from this particular one, it counts 2, 3, 4, 5, 6, 9, then it moves to 10. You understand, the same way we did on the other one. So this is 10 pips, you understand, from their own pair. So that's the difference. So once you put an entry position, you put a stop loss, you can minus the entry minus the stop loss, or you understand, that's just it, and you get the pips. Same thing for the TP, you still get, you can still use your ruler too. So now on gold also, it's a bit different too. You get on gold, it's different. That's how it's different on different stocks. It's different from commodities, gold, right? So on gold, it's a bit different. So on two, our own is the first number after that dot. That's where our own pips starts counting. You understand? The first number after the dot, that's where our own pips, we start counting our own pips. You understand? So that's the difference. So let's move to the next topic here. Let's go back to our GBPUSD. Hope everyone is hearing me, because I hope I've unmuted actually. Yeah. So let's look for GBPUSD. Yeah, this is GBPUSD. So the next topic here is the lot size. The next topic here is lot size. So it's the measure of this thing of volume. That's just the difference. The meaning of lot size. That's the simplest way to explain it. It's the measure of volume. Let me see if I can show you examples on the screen. Okay. So let's talk about let me write out something on the screen to explain this lot size very, very well. So we have the lot size, and inside the lot size we have the standard lot. We have the mini lot, and we have the micro. Wow, seems like today I have lots of visitors again. Someone else is knocking to micro lots. Just give me a sec. Okay, so sorry about that. So, like I said, the lot size here, it's the measure of volume. You get, so we have the standard lot, we have the micro, and we have the mini lot size. So now let me show you the example of the standard lot, the micro, and the so the standard is, you see something like 1.00. The mini, you see something like 0.10, and for the micro, we see something like 0.01. You understand? So that's the difference. So now inside this particular standard, you understand, it's more like you trading 100,000 units. I'll explain. Don't worry. Because I was telling you guys something before. I said your normal money can't, like, it's not even enough for you to participate in the forex market. This is one thing that brokers does. So from here, I'll explain leverage for you. You get, so I will throw more light on it and still explain it when we are talking about leverage. So for the mini 10,000 units, so you need 10,000. Let me write it first before I even talk on it. And this one 1,000. So now what this simply means is, let's say we want to buy GBP USD. So I need, and I want to use one lot size, one standard lot size. I want to use one lot size on that particular trade. It means I want to buy 10,000 units of GBP, because I'm saying that what GBP is going to be strong and what USD is going to be weak. So it means I need 10,000 units. I want to buy 10,000 units of GBP USD. And normally your, what's it called? Your normal capital at that particular moment might not be enough, you understand, to take that particular trade. Because it means, let's say for instance, if I have let me see if I can show you another example. Let's say for instance, I have deleted that stuff. Okay, this is the current market position, 1 point, let's do a random calculation. Let's use 1.276276764 or thereabout. I'm just using this particular position here. This one is showing what I'm using. So let's say this is the current market position, right? And I want to buy GBP USD, you understand, at this particular ask price, because this is the ask price, you understand. So if you place a trade, it will put you at the ask price, you understand. So let's say this is the ask price currently on the market, and I want to buy with one standard lot. It means that I need 127,000 is the money you need to place that trade, that at least you need in your capital to place this trade. 127,000 $649, $649 using one standard lot. to place one standard lot. You understand? So now, if I want to place also same thing, if I want to place what's it called? Sorry. If I want to use place 0.1, which is the mini lot size, 0.1. Where is this thing? Shift. So to place 0.1 lot size, which is the mini lot size, I need 10,000 unit of that particular 10,000. I want to buy 10,000 units of that particular base currency. So it means I need to have, what is it again? 12,769 dollars with 9 cents. 69, okay, 64, sorry, 0.91 is thereabout or something. So now for me to place, to be able to place 0.10 mini lots, you understand, 10 lots. So same thing also, for me to be able to place what's it called? 0.01, the normal, the minimal, the lowest, you understand? You need to have at least $1,276. If I'm not making mistake in this calculation already. Okay, this one is 64, sorry. $76.49 to be able to place 0.01 lots. So now this is where leverage comes in. So now this is where the brokers comes in. So what they do is now we are moving now from lot size, now we are moving to leverage. You understand? Let me write it down here. So I'll be able to explain everything together. Leverage. So now what this particular leverage means, yeah, or what they mean in itself, it's just like the money loaned to you by your broker. Understand? It's like a normal money that they lend to any individual trading with them to be able to participate in the market. Now, like I was saying, you say you want to buy at this particular price, maybe you want to use one lot size on that particular account you get. So you need $127,649 to be able to place that trade, to be able to enter that particular buy. So what the brokers does here in leverage, because we have different leverage, we have 1:100, right? So 1:100. We have 1:2,000. We have 1:1,000. 1:50. It depends on the risk, because the higher the leverage, the more exposed that account is. You understand? So the most likely it might get blown or anything, because the more exposure it gets, you get. So now, let's say for instance, it's just to the normal 1:100. You understand? So for you to be able to place this trade, let me use an example. You have an account size of maybe $1,000. $1,000, and you want to place maybe one lot size or anything. So what they do is they give you 99% of that particular money. You understand? So if I want to take 99% my other phone, 99% of, because I need to do the calculations very well too, so you will be able to understand from here, because from here you know the meaning of equity margin, free margin, and all that you get. So let's continue. So let's check 99% of this particular amount. If you know it, you can just tell me at once in the chat section, or let me just do the calculation from here too. Where is it? Where is it? My calculator. So 99% of how much again? 127,649. That's, sorry. That's 126. So this is it here. Let me write it somewhere else so that we'll use it to explain very well. So the 99% here is 126,000. Excuse me. 372. So now your 1% now. So let me say minus, I want to get your own 1% minus the actual price again, 127, 649. So your own money day is your 1% days equals to 1,276, yeah, 276.49 cents. That's just your percentage. So now you see, now using a $1,000 account with 1:100, most likely they might not even allow you place one what's it called, one lot size. You understand? Using 1:100 leverage, you understand, because of you could see the amount you need, your own percentage that they need from your money. But now let's bring it to 0.1. Let's bring it to 0.1. That is, if you're using 1:100, that's why most of the time I used to say my students to use like 1:1,000, 1:2,000, so that they can place this kind of risk. So you have high risk, which means if that is going against you, understand, it needs to 1,200 needs to go, like you need to see 1,200 in loss before you get margin call. But now, since this is equivalent to the amount of your balance, you might not even get margin call. It might just blow the whole account. You understand? If not, they would have closed you out in, or you understand. So let me bring it down. Let's bring it down to this particular one. Let's say you want to place 0.1 0.10 lot size. So let's see. So 99% of these particular amounts. So this, I just want to use it to explain leverage. So they give you 90. If you want to place 0.10 mini lots, so 99% of 12,764 $1,000. So that means they give you, let's edit this. So they will give you 99%, which is what, 12,636. So for your own percentage, let's see, 12,764. Your own percentage is just $127.64. So this is where margin comes in. So let me explain it very well. So now what it means that as you place that particular trade, right? So the broker automatically, once you place 0.10 cents, sorry, I said 0.10 lots on that particular trade, that account size of $1,000, automatically they lend you $12,636. That's their own money. They are not losing on that particular trade, because whether you make profit or not, they will still remove that their money. That's one thing you need to know. So their own is that they just put that particular money to be able to log you into the normal forex market for you to be able to participate in that particular current market. You understand? So if the market is going against you now, this particular point here, this particular 100, and let me even write it in dollars so that those that are not in class would be able to know. So this particular 127 now is your normal money. You understand? So this one is the broker's money you get. So now this particular money here is the margin. So I'm now moving from leverage to margin. You understand? Let's now move to equity, and let me write it down. I know it's very complicated here, but just maybe if you watch it again, you will understand it very well. Equity and margin. I want to talk about equity and margin using the same example, so you'll be able to understand it. I would have done like graphic presentation for this, but you understand, I wasn't prepared. You understand? So I just wrote down the topics and trying to explain it. So now this particular amount here, which is your own, is now your margin. Let me write it down. It's your margin, your account's margin. And this let's bring this particular one here. Or let me write it down here. $1,000. Your margin is 127. So 127 minus, let me remove it. Your margin is 127. So let me minus it from your money. 127, $1,000 minus 127. Where's my calculator? Don't mind me, I'm trying to multitask here. It's been long. Like, normally I don't treat Forex basics in my class. I don't do it in my class. I have educators, but now it's just like me going back to something that has been old, right? So $1,000 minus um minus 127.64. So now it gives you 872. So $872 is your free margin. It's the floating one, you understand? 872. So I'm using 1:100 leverage ratio as an example, 0.36. So this is your free margin. Why this one is your actual margin, yeah? Okay, so let me explain. I just pray you understand this thing very well, yeah? You get so now the 1% of your money that you are putting on that particular trade that you are using 0.10 lot size, you understand, is your margin, which is it, yeah? So the remaining balance is now your free margin, is the floating profit, the profit or loss. There's nothing like, because your balance will still be 1,000, that trade is still floating, right? So your balance is still 1,000. So your free margin, all these things, you'll be seeing it in MT4. So that's what I'm trying to explain it. So that in case you are seeing those numbers in MT4, you'll be able to understand. You'll be able to understand what's happening before you even build the account. You know what's going on. You get so now the free margin will be the 872 showing inside your MT4 MT5 that you're using to trade. You understand? So now why the main margin there would be 127. So it means that if this trade starts going against you, right? Let's say for instance this trade is going against you minus 800, sorry, minus 200, it will be subtracted from here now. Let's say 200, it will be showing 672 or something like that. You get, and it goes against you again, maybe minus 600, it will be showing 200 and something in your free margin. You get, so that's one thing you need to understand. To be showing minus this thing in your free margin. So now, how do you know your what's it called? So let me explain this one before I go to equity, before I explain equity. So now, as it's still going against you, maybe it goes against you total 872. Now your balance is what? Is floating balance is 1,000, sorry, 127. Immediately it gives you a margin call, because this is the actual what is it called? The actual 1% of your money. You understand? Because of this leverage you use, you understand? This is the actual 1% of your money. So automatically it gives you a margin call that your listing account is about to be blown or anything, because that we just call it blown with forex traders. You get, so it gives you a margin call on this amount using this leverage. So now most of the time what they do is they might close out the trade, and immediately as they are closing out, why they put this margin call is that the margin call is there to also alert them that their own money is at risk. So you understand? So what they do, immediately that margin call comes in, they pull out their money, their own 99%. Immediately they have pulled it out. So that's why I said, even if you make profit, you don't make profit, their own money is not adding up to them, it's not subtracting out to them. You understand? Their own money they are making is from the spread and everything. So just is to help support you to be a part of the forex market. You understand? So they will just pull it out immediately. That margin cost comes in, and if you want to still be on the trade till it blows totally, it might blow. And most of the brokers, what they do is they close you out and leave you at that $127 loss, because you're in deep loss already. You get, so most people might be stubborn and want to place trade. And most of the time, if you want to place trade, they will say not enough money and all that based on the lot size you want to use. So if you want to place any lot size, you need to check the 127. If I want to place 0.01, you understand here, that's they need to give you 99% of that 1,276 here that is showing, you understand, and you bring the other 90%, which means this account can carry it, you understand, so you can place it on this particular account. So that's that for this thing for margin. So now for this equity, you understand, equity is just like margin, your margin plus your free margin. So now your margin is 127. Your free margin is maybe as you pay that trade, it's not yet in drawdown or anything. So it's showing minus 70, 872 here. You understand? So your free margin plus your equity. So equity means sorry, margin, your free margin plus your actual margin. So if it's going in your favor plus 200, automatically your free margin will change to 1000. You understand? Something plus this one, it will be like um let's say it will be like 1200, you understand, in your favor. So that's equity. Your equity will be showing 1200. It's still floating because you have not closed the trade out, right? So it's still floating. So that's one thing you should need to know. I think I've explained too much on that particular topic. Let's move to other thing. I'm getting tired of the explanation. So the next thing here, heading this way, it becomes more sweeter. The next thing we need to talk about is take profit and stop loss. Yeah. Forex basis is not, it's not a play. We have take profit, sorry, take profit, and we have stop loss. So now this is why I used to say most of the time forex is more like a separate business that anyone can do. Some people will say no, it's not true. It's why, because it's a business, or it's, yes, it's a business that you can predetermine your loss before you even place any trade. You understand? Unlike other, that's why forex is not like gamble. You understand? Unlike other parts that you just enter with maybe risks that you are not even ready to lose or something like that. But with forex, you can say, okay, in a week I know how much I want to risk in the forex market. In a day I know how much I want to. Everything is predetermined. You understand? So that is if you know what you are doing, right? So it's not just you coming, because any trader that just comes without the knowledge of forex, I will call them gamblers, because they just come, enter. If they're seeing, if it's going up, they are buying. If it's selling, they're just entering anyhow. You understand? They are more like gamblers. You get, so now take profits is like, let's say for instance, let me use this long and short position. So I'm entering a buy from this particular point, and this is where my target is, right? And this is where I will explain now. So now this particular target point, I'm explaining take profit. Is where's that take profit? I think I didn't, it's deleted again. Take profit. Don't worry, this should be the last basics class we need to have. You will have, you understand. The other ones will be more sweet, you understand, because that one will be actual trading and everything. So you see neckline break works on GBPSD2. This is a neckline, it progresses the entry and it's moving. So now let's continue. So now this particular point that I put as my target, because I'm entering for a buy from this particular point. Let's say I took a buy, I placed a buy position from this point. So this particular point that I'm expecting the market to get to, you understand what, from year to year, this particular point is my take profit. It means that once the market gets to this point, it should close me out in profit. And like the profit I have is enough for me. Yes, I want to close at that particular point. So now if I place that buy, right, and the market is, even as it's going in my favor, you understand, playing around or doing anything. This particular red point here, this particular point here, where this particular line. So maybe as I place that trade, I said, okay, if the market gets to this particular point, it should close me out in loss. I can't take beyond that particular loss. Then it means that that point is my stop loss. You understand? It's just like stop that particular loss. The broker should stop you at that particular loss, because that's your loss limit. You understand? So based on the lot size you are using, you get. So once the market comes to this particular point, you understand, I want the market to close me out in loss. That's the limit I can take. You understand? So that's stop loss. That's your stop loss point, and this is your take profit point. So now inside this particular buy position that we entered here, you understand, we have different order types. So let me talk about order types. I just pray you're understanding this. We have different order types. Okay, so we have the instant market execution, which is one. We have instant market execution. We have the number two. We have pending orders. So inside the pending orders, we have two types. You understand? We have the buy, sorry, the buy and sell limit. And also we have where is the icon? Okay, let me just use this. And also we have the buy and sell stop. So now this is stage two, the different order types. So now let me explain. This instant market execution means as I'm placing that trade, the market should just execute me day and day. I'm not nothing like pending orders. You understand? You should just I'm entering that market at that particular place the market is currently at. Let's say for instance, this place this market is currently at. So let's say at this place I want to sell or I want to buy GBP USD. Remember, it's GBP USD we are still dealing with. I want to sell GBP at this particular market position. That is instant market execution. And maybe I'd say my stop loss should be here and my target should be maybe at this point or anything you get. So this instant point is I'm placing the trade instantly. I want the market to place me in on that particular trade immediately. You get. So now for pending orders, I said we have buy and sell limit. So buy and sell limit. Let me show you example of a buy limit. So now let's say for instance, this market is at this particular point. So now I pending order for the buy limit means that this particular point now that I'm drawing this line, I want that if the market comes to this particular point, if it drops to this particular point, it should put me in on that particular trade. I'm not entering instantly at this place. What I'm doing is that I'll wait. I'm okay. My prediction or anything that I'm looking out for is onto. I want to take that trade onto this market gets to this particular point. I'll take that trade if only this market gets to this particular point. So I'll put a pending order, which is a buy limit. You understand? Buy limit that if the market drops to this particular point, even if I'm not on that particular chart. You understand? Maybe I'm off. I'm doing something else. You get. I'm not with my phone, even if my data is off. Once I've put that pending order before I leave, it means that I've told that broker that once market gets to this point, put me in on that buy. That's what it means. So the opposite is in sell. You understand? Let's say this is where the market is currently at. It means that if this market pushes up to this particular point, that the broker should activate me for a sell. I want to sell from year to year. You understand? I want to sell from year to year. Same thing that if it drops to this particular point, I want to buy. That is for buy or sell limit. That's what it means. So now the opposite is buy and sell stop. You get. So now this is what it means. Let's say for instance the market is at this particular point, and I want to take that trade once the market gets to this particular level. I want to buy once that market gets to this point. It means that as this trade is pushing up or as this market is 2 year, once it pushes up to this particular point, that the broker should do what? Activate me on a buy trade. That's what it means to set buy stop. So now, same thing for sell. Let's say the market is at this particular level, and I want to enter that trade if the market drop to this level. So it means that at this market is here, if it drops and gets to this point, that the broker should do what? Activate me on a sell. So that's what it means for sell stop. Okay. So the next thing here is our normal MT4 and our normal MT5. I think I should connect with a phone to show you how to set up your MT4 and MT5. Let me see if I can connect this my other phone to this, but just give me a sec. Let me log in with this phone. Let me join with this phone. Or can I share my screen? Yeah. Let's see if I can share my screen. I would have used two devices, maybe an iPhone and also an Android. Okay, let me use this. Just give me a sec now. I think there's no account on this other phone. So let's talk on MT for setting it up and everything. Hope everyone is following. If you are following, type 1 in the chat section. Let me know that everyone is following. Everybody that is live on this call is following. Type 1 in the comment section while I'm trying to join with this other device. Okay. If you are following me, following the whole section and everything, type 1 in the chat section. Okay. So everyone is following. Nice. Nice, 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 nice. I know this is a very boring class. Personally, self, me, I'm tired. I hate beginners class. Like I hate this so much. I like we going straight to the point, doing our team, making our money very fast. You get. So where's the link? The link, the link, the link. Ah, this device is not connected. Okay. So okay, I've gotten the link here. Let me see if I can connect to this device. So I can share my screen here and okay. Okay, let's see if I can join. Okay, yeah, I've connected. Yeah, connected. It's echoing. Okay, I think that's fine now. So I'm trying to join with a new device. Let me see if I can share the screen of this device. Okay, I think I can't share screen on phone if I'm not mistaken. That's the disadvantage of this. I think I can share screen on phone. So guys, I think I can't. Let me just leave. Let me close. So I can't share screen on that on from phones. You understand? I would have love to share screen, but what I would do is either I do a recording of a screen recording from that particular phone. You get explaining everything you get about your MC4 and MC5. So now let me just explain what the MC4 and MC5 is. You understand? So now our MC4 and our MC5 is just like our what will I use as an example? It's just like our normal bank app you get. So for me to be able to um maybe bank with Zenith, let's say I have an account with Union Bank and I want to trade with Zenith Bank, you understand? So I need to have an account with them, right? You get to be able to trade with them. So now that's how the MC4 and MC5 is you get. So it's more like the platform that we give us access to participating in the forex market, apart from our normal broker being the middleman. You understand? We need to. It's more like an app that we need to download because everyone can download it, but you can't participate in it like that. You can't start trading to make extra money. That's when the broker comes in, like a middleman, to make us actually participate. So, but the forex, the normal MC4 and MC5, let me show you what it looks like. You can go to your app store now or your Google Play Store. This what this on this particular device I wanted to use to screen it. This it here, these two apps here, your MC4 and MC5. So that's what it looks like. So you can go on your app store or your Google Play Store to download MetaTrader 4. That's the full meaning, and MetaTrader 5. So MetaTrader 4 is the old version, and MetaTrader 5 is the updated version. You understand? It's the latest version. But most people like using MC4 because it's they are used to it. Because I prefer MC5. Why? Because it has crazy feature. How I wish that I can just connect with this device and share screen on this device. I would have showed you guys, you understand? But maybe I will do the recording and send to you guys because I'm trying to pile up all these beginners course so that for those that has will join maybe on the next month, we don't need to treat beginners again. It will just be straight to the point, you understand? So that's for MC4 and MC5. So what else is our normal trading view? So let me clean everything on this chart. So this particular platform that you are seeing here is Trading View. It is where we personally do our analysis before we take the trade or place the trade on our MT4 or MT5. So we done before, there was no platform like Trading View, so people used to analyze on their MT4 and MT5 to place trade. Now it's even becoming easy, and most of the time, how some people do it is that they connect their MT4 and MT5 on their laptop, so it has a broader, a bigger screen. You understand? They can analyze and place trade. Hope everyone is hearing. So now let me increase this. I want to make sure that my mic. Okay, thank God my mic is on mute. I wanted to say. I mean, it's all this thing I've been saying was waste of time. So now, the Trading View is like now a more advanced platforms with crazy tools that you can use to analyze the forex market. So this particular platform you're seeing here, you see the link here, tradingview.com. So if you click on Trading View, let's go Trading View. Let me see, like I want to open a new. Okay, Trading View. This more like it looks. So if you click on chat, that's where it brings you to that particular chat you get. So this is it here. So it's same thing. So you can just open an account with them. You create an account with them. You say I already have one. So you can create an account with them. So now this particular point here is for the time frames. So this 5 minute chart, it means here that all candle here represents 5 minutes. All candle here, like in the next 5 minutes, you can see it's counting here. So in the next 5 minutes or in the next 1 minute plus, other candle will open. So each candle here stands for 5 minutes. If each candle here is 5 minutes. So this one is 5 minutes. So in the next 5 minutes, another one will open. Another 5 minutes, another one will open. So same thing for 15. Each candlesticks here are 15 minutes. 15 minutes. It opens. Each candle opens in the next 15 minutes. In the next 15 minutes. Same thing. This is a that's what we call time frames. We call them this part, this particular points. They are different time frames. So the 30 minutes, each candle here represents 30 minutes. You understand? So it took 30 minutes for this particular candle to form all and complete. You understand? Open and close. You understand? So the same thing here, it remains 1 minute for this particular 30 minutes candle to close. Same thing here, 1 hour time frame. So each candle here represents one hour. So in the next 1 hour, another candle will open. That is around 30 minutes to go, 31 minutes to go. This is 12:28. So the next 31 minutes, a new candle on this 1 hour time frame will open. Okay, same thing for the 4 hours. We have the daily time frame. This is daily, this is weekly, and we have more. You can see we have 2 hours, 3 hours, 4 hours, daily, weekly, monthly, 3 months, 6 months, and 12 months. So you can just decide to check any time frame you wish and everything. So that's for that. So the next thing here is I wish I was able to connect with, because the main thing is that MT4, but I will do a video and send to everyone. Maybe tomorrow, before tomorrow, they'll see the video, or latest by today, maybe after this class, because I'm heading now. So now this particular point here that I clicked is where you choose the pairs. You can see here is all, it's fixed at all. So I can type US30. US30 is a stock, right? Like when I was telling you about the market participant, I told you that companies, government, everything. So companies like Apple, you can see it here. You get, so they are part of the forex. You can see there. These them here. So I think Microsoft is also here. So they are stocks too. So we have US 30, the 30 is it 30 top companies in the United States. So Dow Jones, US 30, that's the name too. We have Nasdaq, that's the top 100 companies. Nasdaq, which is US 100. You can just type US 100, and there you have it. Nasdaq US Tech. It has different names. You can call it different names. It has different names. You understand? So that's for choosing the pair. And now for gold, we have XAU, commodity, USD. You understand? So that's for good. So now you see all what can be traded in the forex markets. You see stocks, you see your funds, futures, forex, which is the normal currency, crypto, indices, bonds, economic and options, everything. You understand? So that's that. What else? What else? What else? Now let's move to the forex analysis. So we have different forex analysis. So today is just mainly basics, and I'm glad that we are going straight to the point. And this is So we have one fundamental, we have the fundamental analysis, we have two, the technical. Personally, this is why four, you understand, analysis. And we have the sentimental. I guess most people don't know that this exists. You understand, sentimental analysis. This sentimentals is very common among crypto traders. Very common among traders. So now the fundamentals deals with news. This fundamental analysis deals with me trading based off on economic news. You understand? That's just the economic news. So that's what this fundamental stands for. You see platforms like Forex Factory, investment.com, which other is it? FX Bull, platforms like that. You understand? That's where those fundamental analysts get their information to take trades. So you see informations like sorry, I switched screen and it was not even showing. So I was just so all this while I've been switching screen without knowing that it was not even showing here. Powerful. So let me show you the screen. So you see Forex platforms like Forex Factory. You understand? So platforms like this is where most fundamental analysts get information to trade. You understand? So you see platforms like what's the name of this platform again? This news platform, is it NMDC or something like that? All those kind of news platforms you get. So those are the platforms they use to get fundamentals. You understand? So like today, which is 6th of May, there is no news. You understand? Today, you could see the news here. There's no high impact news. It's just medium and low impact news. You understand? So that's from today, Monday, you get. So fundamental analysis is straight based on news. Like let's say, for instance, maybe the United States, they are at war. You understand? Or they are, how will I even put it? Let's say the United States. Let me look for a perfect example. Let me go back to our chat. Okay. Let's go back to our chat. Okay, let's say for instance, the United States dollars is becoming weaker, or there's a particular stuff that is happening in news, or a particular stuff that is happening in the United States that is making their economy to maybe drop or making their dollar to be weaker. You understand? So most of the fundamental analysis know that when there is a news movement base that is supposed to bring an information that's telling us that US dollar is going to be weak, so they know that any place that US dollar is the quote. Remember when we were talking about base and quote currency? So any place that US dollar like is the quote. Now this particular one, US dollar is the quote currency. It means that since US dollar is going to weak, I should be looking at opportunity to buy once that news is going to be announced. Maybe it's going to be announced by 1:30. So I know that okay, according to that news, it means that if that news drop, US dollar is going to weaken more because the economy is not doing well. So that news would even affect it the more. So it means that it will get weakened. Then it means that I should be looking for a buy opportunity. So any other place that is like USD card, you understand? Which USD is the base currency. So it means that I should be looking at to do what sell, right? Because USD is the base currency and CAD is just like the quote currency. So it means that USD is going to be weak and CAD is going to be strong. So as CAD is the opposite, you understand, I need to sell because it's going to be weak. The main pay is weak, so it should drop. For anything that is the opposite, then it should buy, right? So that's for that. So now I'm going back to our technicals. Technicals now deals with the chart itself, this particular market you're seeing here. So technical analyst believes that markets always repeat itself. So you understand the forex market always repeats itself. The movements repeat itself. So we are using past information to trade the current market because we believe that that particular stuff that we are taking has happened before. That's why you see something like we having a strategy. that once it gives us these confluences, it means that that particular strategy that we had before, that particular strategy that we are using, it has happened before. That's why we are now seeing the similar confluences in the current market. So it means that we are trading based of things that has happened before. You understand? So, and we are using advanced technical tools to support the fact that we are either looking to buy or selling that particular market, current market. You understand? So now for the sentimental, sorry. So the sentimental analysts, you understand, those ones trade based on what the big boys in the market are doing. Like I told you that our normal money can move the market. We are just like 2% of the whole forex market. We retail traders that are trading, even people that you are seeing with $1 million, 100K, 500K, their money is not moving the market. It's like it's not checking the market at all. So the people that their money actually check the market is like all these big commercial banks, the hedge funds and all that you get. So these sentimental traders trade based on the information or based on what these big boys in the market are doing. You understand? Because most likely those ones comes with huge funds. They could see them coming like $1 billion. You understand? So something like $500 million. So at least it will move the market a bit. So they maybe the year news or that this particular country, USD, is pumping in dollar to strengthen their dollar because it was weak. They are pumping in money. Understand? So maybe big banks are pumping in money. Everybody, big boys, the big market participants are pumping in money on the US dollar, which means that US dollar is going to be more stronger. So those sentimental analysts, they trade based off that information, and where they even take information from is like normal TV news from the TV platforms. You understand? So that's where like the normal NT, not NT actually. Yeah, so social medias too. You get, so those are places where they get their information from. That's why I said it's most common among crypto traders. Like when before Bitcoin pushed up that period, you understand. I think was it the big holders of Bitcoins were pumping in money or they were buying money for it to skyrocket. I forgot because I don't do crypto, right? So I think that was even that period when Bitcoin skyrocketed. So most people were buying during that period, you understand, based on sentimental, you understand. So that's for sentimental. I think that's all. Or is there more? Let me see. Because we have been talking. So I think that's all for this Forex basics. You understand? So the only thing left is the MT4 and MT5, which I will do a screen recording, right? And send across to you guys. So now I think that's that for now. So if you have questions, you can either type it out in the chat section and I will start taking it one after the other. But it should be based off this class we just had. It should be based off this forest basics. You understand? But if you know that you understood everything, because the video will be ready after this class, immediately after this class. It's being recorded on YouTube, so it will be ready after this class. So if you have questions, just let me know in the chat section before we call it a day. I think we've spent 1 hour 30 minutes already. So if you have questions, type it out in the chat section based on this, based on today's class, you understand? And if you learn something, yes, just put fire in the comment section. I know some people won't learn something because this is basic class and software advanced already. Okay, so favor precious sake, can you recap about the fundamentals? So I said fundamental analysts are mainly the analysis, you understand, they are mainly people that trade based on the economic news of a particular country, right? So, and there are different platforms where they get their information from, like the Forex Factory, you see investments.com. Let me start opening all those websites. Let me share the forexfactory.com, their website. So they go to economic calendar. We have something like economic calendar. So let me share it. Just give me a sec. Stop sharing your screen. So this is Forex Factory. So this is forexfactory.com. So you just go to calendar. So this is more like economic calendar. You understand? So this is where they see news is their impact. This is the impact of the news. So you see on Tuesday, this red stands for high impact news. It means that it's going to move the market very well. You understand? So all this, let me show you what all of them. This is where you can filter. Maybe this is the currency pairs that maybe you don't want this one. You can highlight and remove the ones. So this is for high. This orange color is for medium impact news, and this one is for low. This one is just neutral. It doesn't affect the market like that. You get so high, medium. So the only two I pay attention to is this high and medium. The other ones I don't pay attention to them. You get so that you can see the currency pairs it will affect. You see this one that shows red Tuesday tomorrow. It means any pair that has AUD, this is their own news. You understand? So we also have platforms like investment.com. Let me share the screen also. Investments, investing on.com, if I'm not mistaken. Yeah, that's another platform. Let me share the screen too. Okay. So we have investing.com. So this is investing.com. You can tap on it. I think it's a Nigerian platform, if I'm not mistaken. So they have calendar. You could see economic calendar. So if you click on that calendar part, it's loading. So is the economic calendar. Okay. So this is theirs. You understand? So this is the news events. This is the impact. You see their own. I think it's based on stars. So this two is for medium, if I'm not mistaken. One is for low. This is for medium. Moderate volatility expected. Let me see if I can see 3 star. There's no 3 star here, so I would have showed you. So I think today is holidays. I think one of a broker I was speaking with today, they told me today was holidays. Okay. So that's for this thing. This way these people get their let me see if I can see. So I don't really use this in, but we have FX Bull too. We have FX Bull, if that's their name. I just try to remember their name. We have different platforms for news. No, not FX Bull. I've forgotten their name. Because this one is a broker. That's not them. But this one's deals on from the. I think I've talked about them before because theirs was a bit advanced. So that's what I meant. You understand by fundamental. This one's trade based off news. You understand the trade based off economic news of a country. Let's say, for instance, maybe a country is at war. You understand it tends to affect most currencies because it tends to affect their what's it called, their trade with that particular currency and everything you get. So let's say, for instance, maybe United States, they are facing crisis, maybe unemployment claims and all that you get, and maybe they are doing, how will I even say, is it deflection or something? That their currency is just dropping or something like that you get. So it means that maybe if a news is coming up, right, and the news is something that is going to even affect the that particular United States per demo. It means that fundamental analysts, you understand, they used to look at previous results and let me show you. I think I saw it here while we were talking. So I mistakenly removed myself. I was trying to click back. You understand? So let me share the screen again. Where is it again? So let me just use this one as an example. So this is where you see the actual, you understand, the previous and the forecast here. So what they used to do, they used to compare, I think they compare this actual, because I'm not more like a fundamental analyst, I just look for high impact news. I believe that technicals, anything, if my technicals are correct, it will still be in my favor, right? So now they compare this actual and previous to know the next forecast or something like that. You get, so that's how they used to do it. They compare the previous news, how it affected that particular pay, you understand, and from there they should know the next forecast, you understand, and comparing it with normal because there are some platforms that even gives that more advanced news, telling them reasons for this, and what they should be expecting and all that. So I think that's for them, you understand. So they trade based off economic news, you understand. So if the news tells them that it means that US dollar should drop more, you understand, should be more weaker, it means that any pair that USD is the quote, because this is the base now, GBP is the base. It means that any place that USD is the quote, and we know that the news is going to affect it and makes USD weaker, it means that they should be looking at to buy pairs that what USD is just the quote. But if USD is the base currency in front, then they are looking at to sell that particular pair. You understand? So that's just the difference. Hope you understand now. Yeah, most people use my FX book too. I even use my FX book to do my normal calculation on gold. So if you understand, I hope you understand now. So if there's any other questions, just let me know before we call it a day. But if you understand everything, just type yes in the chat box so that we'll call it a day. So I'll do a recording of that empty file and how to set it up and everything and send across to those in the group. You understand? Okay, so I think there's no more questions for today. But if you still have questions later on in the day, you can drop it in the group chat. I will be going through the group chats. You understand? As time goes on, you understand? You can tag me to the question and I would answer it. You get, so our next class is on Wednesday, physical location at that police star Lekki, right? So that's when we'll start talking on the advanced side from this level. You understand, from trend line psychology, move to the strategy and everything. Then from there we move to technicals and more advanced and assignments and everything. Yeah, but for now, this is just the basics. You understand? This is just the forex basics. So I think that's it. So the time for the section, I want everyone to be there by 10 a.m. latest. 10 a.m. You understand? So that we won't spend so much time. So I know that, so as we are having class, this one is just entering. Probably is just entering. This one is just entering. This one is just entering. You understand? So at least latest 10 o'clock, everyone should be there. So at least 2 hours would be having serious class and it gets more advanced so that we don't someone won't just be pushing us back and forth, you understand, because the person is coming in late. So if you know you're staying far a bit, you understand. So she's try as much as possible to come early. You get, so at least that would be able to do our class for at least 2 hours and then we relax, take a break and everything. Or even call it a day because yeah, we don't want to do much for those that are coming from far too. You get, so this the location is not clear. I dropped it on the group, the particular design, say the particular address, Polystar. Just type, if you open your map now, if you just write Polystar Lekki Phase 1, you see it there. It's at Marwa bus stop or something like that, Lekki Phase 1. So that's the address. The building is at the roadside, so it's not very hard to locate. It's at the road itself, the express road, beside the express road, sorry. You get, so that's it. So once you come, um, um, it's not accessible for anybody, random people. You understand? Only those that are in the group can access it, can join the class, can pass through the seminars to enter the class. You understand? So I think that's it, guys. So all informations would be passed across on the group too. If you have questions, you can drop it on the group chat. And so I know it lost. Sure. You can't get lost. You understand? It's not hard to track. You get, so I think that's it, guys. And the video link will be sent to the group after this class. You get, and yeah, all information also will be passed across to the those in the group too. So I think that's it all. And yeah, bye for now, guys.